In our previous video, we were looking at calculating if our partners Pam and Lam had to either receive money, wherein in receiving money their capital account debited or their bank account credited, or if they will have to pay money into the bank account to bring it to a close. So we calculated that Pam's debit side was $172,160, but her credit side was less than that, and we have that she has to pay $31,350 and subsequently Lam $8,550. So let me show you how we came up with those calculations. For Pam, $172,000 minus the $128,000 minus $6,810 minus $6,000 gives us $31,350. So her capital account is credited with $31,350, and subsequently the bank account will be debited for the same amount. So capital $31,350, and let's look at Lam. We say so let's calculate for Lam. Her credit side $93,000 plus $11,250 plus 75 plus 26,400 give her total on her credit side $138,150. But when we add the $120,000 plus the $51,100 plus the 45, that only came to $129,600. So then we take the difference between the $129,600 and the $138,150. So $138,150 minus $129,600 gives us $8,550, and that is credited to her capital account. And then we will go to the bank account for Lam and debit it for the same $8,550. So if we look at the capital account for the partners, you will see there's no balance on the account. Remember, the partnership is coming to an end. The partnership is closing. So once it is closing, none of the accounts on the books of the partnerships will have a balance. So all of the accounts are closed off. So the capital account will not have a balance. So currently this capital account is closed off. The current account is closed off. And now let's look at calculating and see if we can close the bank account. So let's see if we will be able to close this bank account. See if the two sides add up to the same amount. So let's look at our calculator. So the bank account on the debit side, $23,900 plus $31,350 plus $8,550. That is $63,800 on the debit side. And let's see if our credit side adds up to the same thing. $11,000 plus $2,800 plus $50,000, $63,800, and that brings us close to the bank account as well. So we have, so all of our accounts for this partnership has been closed off, and this brings a closure to in terms of dissolving the business. So the business has been dissolved. All the accounts were closed off the books of the business. one of the things that we have to look at for this partnership is calculating our goodwill for the company, because you will either have goodwill or negative goodwill. But let's see how we will calculate the goodwill. And I have a little note that I can read for you with respect to the takeovers and goodwill. And that tells us that an excess of the purchase price over the total fair value of the net assets acquired represents the price paid for goodwill, right? So what we're saying is that, let's look at this question again. The price that is paid for the net assets, the price paid, the purchase price is $360,000, and the fair value, or when they revalue the assets, the valuation of the new valuation of their assets, premises is $240,000, equipment $71,400, and vehicles $50,200 and $41,600. So these values are what we're going to use for the balance sheet for the new company Apex, because it's stated here the remaining assets excluding debtors were taken over at these values. So when we add up these values, we have to find out what these total. So let's see what these total. 240,000 plus 71,400 plus 50,200 plus 41,600. These, did I add something else that I shouldn't have? Let me go over that. 240,000 plus 71,400 plus 50,200 plus 41,600, right? $403,200. These are the assets, and we are reminded that the company also took on the creditors, which were $16,800. So in order to get our net assets, remember that when we calculate our net assets are our liabilities minus our assets minus our total assets minus our total liabilities give us net assets. So the liability that this company now has would be creditors of $16,800. So let's subtract that to see what our net assets are. Minus $16,800. So our net assets are $386,400. So the purchase price is $360,000, but our net asset value is $386,400. So it is stating that the company is paying less for the net assets of the business than what they're worth. So if the price paid for the net assets is less than the total value of these net assets, then this will be considered negative goodwill. You don't say badwill. It will be considered negative goodwill, and it can be recorded in the statement of financial position as an intangible asset but as a negative figure, or it can be recorded in the statement of financial position as under your finance by section as a capital reserve. Now, if you have the Harrow-Randall text, that text tells you that if the price paid for the net assets is less than the market value, than their market value, then the difference is recorded as a capital reserve. So we can record it as a capital reserve, or we can record it as negative goodwill. Okay, now if the price paid, if this purchase price was more than this net asset here price, then you would have your goodwill that is recorded normally as your intangible asset. Okay, so let's look at our calculation. So I'm going to give you a little note now how to calculate your goodwill. So calculation of goodwill. Calculation of goodwill. Our goodwill is equals to the purchase consideration minus our net assets. Okay, and remember that our net assets are our total assets minus our total liabilities. So what would be our goodwill? So our purchase consideration is $360,000 minus, so let's look at our assets. We already had those figures earlier on. So that is $240,000 plus the $71,400 plus our $50,200 plus our $41,600. So these all together minus our $16,800. Right, gives us our goodwill. So when we subtract, so let me subtract 386,000, right? So our purchase consideration $360,000 minus 300 and go back to that figure again, $386,400 gives us negative goodwill of $26,400. And you would have had a previous note on this. You don't say bad will, you say negative goodwill. Or this will be considered, or this will be, you can say negative goodwill, or it can be considered a capital reserve. Okay, capital reserve. So this is our goodwill. So then what we are going to do when we come back in our next video, we are going to do the statement of financial position, and that will complete this question. So some notes for you. The goodwill is your purchase consideration minus your new net assets, and these are our, here, these are the values of our assets now. And remember that the company took on this these creditors, so the total of those minus the creditors will give us our new net assets. And that can be considered if the purchase price is greater than your new net assets, you have goodwill. But if the purchase price is less than your new net assets, you have negative goodwill or capital reserve. And we must always take that into account in our statement of financial position. So when we come back, we will definitely be completing this question by doing the statement of financial position for this new company called Apex Limited.